Hello and welcome to the Weekend Investing Daily Byte of 19th July 2023. And the markets remain in a fine fettle. Markets are chugging along very well. There is no, stopping this market right now. The market has been on since end of March, and some hiccups were there along the way, but that is natural. To have a ranged bound period of few days or a profit taking bout of 3 4 5 days. Overall, we have gained from below 17,000 to nearly now 20,000, and almost a 20% kind of a gain that is coming through within 4 months, which is extremely remarkable for sure. Today, also, the Nifty has mounted a new all time high, closing at 19,833, comfortably above the breakout level of 4 days back. So, we now have enough wiggle room, even if some consolidation were to happen and then start to go up. The internals of the Nifty heat map are there on your screen. You can see that State Bank of India, along with Bajaj Twins, led the banking and finance space. IndusInd Bank gained 2% also. Kotak Bank gained 0.8%, and HDFC Bank gained approximately half a percent. Other winners were within the power and energy space: NTPC, Power Grid, Reliance on the last day of the demerger of Geo Financial, BPCL up 1.5%, ITC up 1.3%, L&T up 0.79%, Sun Pharma and Dr. Reddy up, Tata Motors and Mahindra up. So very nice bouquet of stocks that went up. Only a few stocks: TCS, Maruti, Bajaj Auto, Asia Motors, Bharti, and Grasim were down. Oh, sorry, Aditya Birla was down. The PSU banks led the charge on the sectoral front. We had 2% gain on the PSU bank sector. Public sector enterprise also came back today after a dull week. In the last 1 week, it is still down minus 0.6%, but today it was up 1% on the back of good gains in certain public sector enterprise stocks. Energy stocks, as I already mentioned, up 0.8%. Infra stocks doing well at 0.7%. There is more and more talk about how India is now leading the world's growth, and Chinese growth actually is sputtering. There has been big write downs in large property developers there. There is all kinds of troubles that are brewing there. My only fear from that front is that it may not, it should not happen that there is an overhang because the Chinese market or the Chinese economy is slumping. Although there is the other side of the coin where we are gaining on a plus one China plus one basis. But yeah, I mean, so far, metals, commodities which are directly impacted by Chinese markets have not budged. So metals up 0.4%, commodities up 0.6%. Pharma doing very well in the last month, or in fact, in the last 3 months, pharma is up 11.6%. So gradually, I'm seeing that pharma stocks are coming out of that slumber and gaining half a percent today. Real estate stocks doing all right at 0.2%. FMCG stocks led by ITC up 0.3%. Only IT and auto were the ones which failed to take off today, but they have done quite well over the last 3 months at 19% and 17% respectively. So very well done by most sectors in the week. Only public sector enterprise, consumption stocks, and auto stocks are in the red. Everything else is gaining. IT stocks have gained the most in this last 1 week. Mid caps doing quite well. I mean, after 2 days of sort of sideways move, mid caps again picking up at 36,839. So I mean, nothing to complain really on the mid cap front. Small caps, after a sharp move yesterday, again moving back up, although still not above yesterday's high, but still at the previous high of 11,049. So a great move in small cap 250 index also. Nifty Bank had a profit booking session yesterday. Today we have closed at a new high at 45,669. This is a very nice pattern where we broke out, retested the breakout, and then are going to a new high. So it's very, very reassuring. And banking results that are coming through also look quite robust. So now let's talk about the gold price breaking out topic. But first, let's discuss the US dollar index. I've shown this in the past also, but and also please remember to go see the US dollar index video that we did a few days ago. I'll put the link in the description below. That'll it'll be it's a short explainer on what dollar index is and how it impacts other currencies and markets, especially emerging markets, precious metals, and all those things. So what we have seen is that ever since the U.S. interest rates started to go up, the dollar index was climbing higher because there's a natural tendency of dollars to flow in the direction of a jurisdiction where the yield is higher, and that's how the liquidity flows there. But post October, once maybe the market realized that you can't go too high from here, the dollar index has significantly come down from 115 levels to 101 levels in February 23. And since then, it has been in a narrow range. But in the last 5, 6 sessions, it has considerably broken down from 103 levels towards 100, and currently it is creating a flag like pattern, which if it breaks down will go very fast towards 96 levels. Also, there is uh, a somewhat of a head and shoulders pattern formation here with two right shoulders. Not very convincing pattern, but if this plays out, then we are going much lower towards 85 levels. So until we break out and go above 103, 104, I don't think there is any steam left in the dollar bulls uh, side of the story. But if it gradually falls, then all other risk assets, it's basically the dollar versus everything else kind of market. So if dollar falls, everything else will rise because money flow happens that way. That is how the system works. So if you see the gold, uh, dollar gold chart, this is the spot gold on USD basis. You can see that we rose very sharply from 2020 levels of 1400 odd towards 2080 by August 2020. And ever since August 2020, it's almost going to be 3 years in the next month. We have not broken out to a new high. So market has been consolidating now for 3 years, digesting all the gains from that rise from 1200, 1400 towards 2080 in 2018 to 2020 period. And a lot of people watching this will just brush away gold, saying that it doesn't go anywhere, so it's a useless asset, so on and so forth. But if you look carefully, it is very much in tandem with how the US dollar is moving. And as soon as the US dollar starts to break down even more, you will see that gold will try to break out of this triple top to 2080 level that it has formed. Very interestingly, when it came down from 2080 levels towards 1680, it went back to 2080 to create a double top. Then it came back to 1680, creating a double bottom. Actually, several bottoms at 1680 level. So it was a extremely important support, which gave away towards 1600 levels. But this eventually could be seen as a false breakdown. So most people got trapped. The traders got trapped here, and then there was a sharp rally back to 2080. So it seems that the gold market does not want to go below 1680 at all. And now there is a, if you consider this as a shoulder and this as a head pattern, then we are creating a right shoulder. Once we do, if and when we do break out of 2080, I think the floodgates are going to open, and gold is heading towards 2400 in that case. But nevertheless, regardless of what dollar gold does, Indian gold has been doing extremely well because we also get the benefit of our depreciating currency. And we can see here that in 2020, when Indian gold 10-gram gold was 40,000 rupees. It has gone to nearly 60,000. In fact, it was 62, 63,000 recently, a couple of months ago, but now is at 60,000. So 50% gain has come in the same period, uh, as the sideways movement in 3.5 year period. So the sideways movement here is still in negative territory in dollar terms by about 5%. But if we see from this peak, we are up by 2 or 3%. So we've gained like 8% versus the dollar returns. But over a 3.5 year period, we've gained like 50%, which is way beyond the normal CAGR seen by INR gold, which is about 11.7, 11.8%. So definitely have gold in your portfolio. Don't believe in all the general prescription of 5%, 3%, and 10% gold. I think you need to have much more in today's volatile world. Uh, my thumb rule is half your age as percentage of your net worth into gold. A lot of people will not believe me, but that is what I believe in. I could be wrong, but that's how I think that this, the instability in global monetary system that exists today, and how a new monetary system may come into place in the next decade or two. This is the transition vehicle that may get used, and there may be some sort of a commodity or gold backing to new monetary systems when they do come around. So don't ignore this aspect. Whatever is comfortable to you, do allocate. Whichever vehicle you choose, physical, ETFs, SGB, mutual fund, whichever one, digital gold, whichever one you can, if you're comfortable with, go for that. But don't ignore this asset class, because this is the true hedge, not only for your equity assets but for your entire INR assets. If you're sitting in India and you have all your assets denominated in INR, and tomorrow if we have some sort of a ludicrous formation of government which may destroy the economy in the next 5-10 years, this is the only thing that is going to save you. So use this as an insurance. Use Look at it as a way where you get insured as well as it pays you 11.5%. If When you see it from that lens, you will stop comparing it to equity returns or real estate returns and all that. If you're not investing in gold for returns, you're investing in gold for beating inflation and securing all your other INR assets. These are the two aims of investing in gold for me, and I hope you can see that uh, you know that uh, that reason for yourself and go for it. Thank you so much for watching. Please do subscribe to our channel. We are very poor in our subscriptions. We want more and more people to watch this channel. Please like it. Please share it with your friends and your investment groups if you like the content, and do suggest us or advise us how we can improve our content and improve our channel. Thank you so much. Bye. Investments in securities are subject to market risks. Read all related documents carefully before investing.